Aloha, everyone. Well, today can be summed up as pure carnage overall in the market. Not surprising at all because you'll see the exact same pattern ever since August. We start to rally, it's on no volume, our uptrend becomes less and less powerful, and it looks like we're slowly rolling over, and then we death dive. Did that in September to October. Then we did the same thing. We started a rally really big, and then our rally got lame and lame and lame throughout November, and then boom, we rolled over. Same thing in December. Started off powerful, then no more power, roll over, and now same thing again off the February lows. We rally once again on below average volume, and here we are again rolling over on big volume. Now, this being said, this time is due to the strong dollar. The dollar is in the middle of its biggest rally in 34 years. The United States dollar is strong worldwide against every currency, and this thing is going almost parabolic at this point. It's definitely on a climax run. I don't think it's parabolic just yet, but once again, the trend is extremely extended, and it had its biggest volume today on the UUP, and you can see with the where's my euro short? EUO. There it is, EUO. And as you can see with the euro, it is cliff diving. This is the ultra short euro, so it's in the other direction. But the strong dollar is driving this sell off right now. But it's pretty ugly overall. The NASDAQ and the Russell 2000 remains under a buy signal. They're still holding above its 50-day moving average. The oscillators are coming off the overbought level, so we're pulling in. But we're nowhere near oversold, and there isn't enough indication yet that, yeah, we're definitely going to bounce here. And on top of that, the NYSE has switched from a neutral signal to an all-out sell signal. Oil stocks appear to be weakening again, and they account for a major portion of the New York Stock Exchange. So that's why this index is the weakest. But with the oil stocks looking weak, this is not a surprise. The S&P 500 and Dow Jones Industrial Average have switched to an operational buy mode to operational neutral mode, with their closes below the 50-day moving average on heavy volume. But it's funny how these things look the same and same, and like I continue to complain about, these low volume rallies with the lack of beautiful hot stock charts, as long as that is around, for me, it's going to be dangerous to get long. I don't know how some people can have conviction behind their trades, but I assume if this thing ever turns into a bear market with the strong dollar, that's telling me the Fed's going to have to raise rates this year. But a lot of people think it's not going to happen, and I don't know. It's all speculation. But the bottom line is, if they do start hiking rates, I have a feeling there's going to be a lot of trapped longs and a lot of smart people with a lot of conviction. They're going to go through a lot of pain. But it's getting ugly out there, and we have to take some defensive measures, raising sell stops again. Most of mine are raised already. There's some sells to go over tonight. Those are going to be on the new positions page for you to look at. The biggest one, though, is VRSK just blowing up right after being a new long. Setting sell stops in the morning was very prudent. As you can see, if you would not have set sell stops, it would have been a pretty big loss on the day. But with this weakness, though, there are some certain stocks that are strong out there. And overall, my portfolio held up very well today. Only 3 full sells, 1, 2, 3, 4, 5, 6, 7 partial sells, and that's not bad in a portfolio of 70 stocks. That's an insane amount to be tracking, watching. I'm not fully long all of them, but I am tracking 70 stocks. I've been taken out with sell stops of some of them, but it's basically about like 40 in one portfolio and 40 in the other, and then there's multiple in the other one. But the bottom line is that we're holding up overall well, but the market's weak, so it wouldn't surprise me if we continue to weaken. Of course, what continues to be funny is the lack of signals that I'm taking, the signals that I get that I don't take. CRMD is now up 185% in 1 month since passing on its signal. So that stock managed to finish higher today. CBMG also finished higher today. That stock is up 40% in 2 weeks since I passed on it. And last night I was going to take a speculative position in CYTX, but earnings are in 2 days. I didn't, and of course that stock is up 9% today. Brilliant, right? And there's just one more, SYN. I passed on this stock here in mid-February. It's now up 31% in a couple of weeks. So I'm on a little roll here. And then the one stock I do take that does have max green bop that looks like the rest of them, that works out the first day, look at what it did today. It decides to lose its max green bop. You'll notice that CRMD, CBMG, CYTX, and SYN, while SYN has recently, you can see that it wasn't as much off as FLXN. So it continues to be a rough market, and we're seeing why based on today's price action. That being said, the biotechs that I'm long held up well today and did well, and oddly enough, didn't expect this. I actually have two new long position in biotech stocks. ASPX is a perfect speculator scan stock. This is the highest quality scan. Only 52 stocks out of 10,000 qualify for this scan. ASPX is one of them. It's producing a pocket pivot point signal. It's only in this scan. So it's a 2.5% long position since it's a part of a NASDAQ group in the NASDAQ cylinder buy mode. And then FWP is a recent IPO, pocket pivot point buy signal off its 50-day moving average. Have no idea when earnings are. However, it was in the IPO scan where it flagged first off, and then was in my price volume BOP surge scan. Always good confirmation with the pocket pivot point signal. We'll keep this one tight. Final cut loss will be below today's low of day, 22.71. So we don't risk much more than 2.5% on this position if we are wrong. 2% of account capital only. And then whatever I have left goes into SQQ or TECS if you want. I was thinking about TECS, but I tell you what, it's splitting hairs. TEX and SQ, they're both basically part of the NASDAQ 100 as it's full of technology stocks. So TEX up 5.77% or SQQQ up 5.45%. You can pick whatever one. It's easier for me just to go ahead and add to SQQ since I already have this hedge position already. That way it'll be less sells, less commission, like it matters. Commissions don't mean shit to my portfolios because of the amount of capital that's in them to the cost of the commission. But I do understand for those of you that do not trade with low-cost brokers that it can add up. So SQQ will be the add with the rest of the account capital. And it's basically time just to, be careful here. If we go back to the indexes really quick, we can see, like I said, we're coming off the overbought levels. But you can see even with stochastics and RSI, we're nowhere near oversold on the NASDAQ, Russell 2000. We're getting there on the RSI, on the Russell 2000. Same thing with Dow Jones Industrial Average, but the stochastics is the one that I watch, and that's nowhere near oversold. And it's not even at mid-range, guys. So until it gets oversold, this could get uglier.